the flow trading plan. Now, arguably the extreme, so on the other side of a delirium trading plan and the complete opposite, but they have more similarities in my opinion than differences. And that's also something we will dive into. So this video will also be quite similar to the delirium video. So who is Flow for? Skeleton, interest list, the plan, don'ts, and homework. Okay, now who is Flow for? First of all, ideally you are available from 9:30 a.m. to 4 p.m. right there. Again, do you need to be available throughout all those hours? No. Do you need to be staring at the screen for all those hours? No. But for a flow trader, you can also be a little bit more specific. So from 9:30 a.m., for example, until 11 a.m. New York local time, that's also a really good time period. So 9:30 a.m. to 11 a.m., that's perfect. That's the AM session. Now the PM session is from 1 p.m. to 4 p.m. If you're available during one of those times, that's perfectly fine. You can choose one and stick to that as well. Now, I have aligned those times with the US indices because 9:30 a.m. is equities open. That's where equities open happens. That's where a lot of volatility for the US indices comes into the market as well. And the reason for that is because I believe the US indices are the ideal instrument that you want to trade. So for flow trading, you are going to be focusing on one singular instrument. No other instrument, you're going to be focusing on one singular instrument. That's very important to understand because you want to be mastering one single instrument, and you can't master one single instrument by focusing on two things at the same time. So if you trade, for example, NASDAQ, then you also trade a little bit of euro US dollar, also trade a little bit of silver, that's not going to work. You want to focus on one singular instrument when it comes to flow trading. Very important to understand. Okay. Then for flow, you are going to have quote unquote more action. So people that like more action, that like the lower time frame more, flow could be for you. Now, I want you to understand as well that I have quote unquote more action because it does not necessarily mean that you'll have more trade opportunities or better trade opportunities. That's not true. So just because you might have more opportunities throughout a week doesn't necessarily mean that you'll make more profit. Very important to understand as well. All right, then I'm going to be providing you with a skeleton again, and this slide is the exact same that we went over in the delirium trading plan as well. So there's no news rules except for the big three, no resistance rules. I just want you to focus on a very naked trading plan. Then journaling is just as important as well, of course, for a flow trading plan. Now, don't be lazy because your biggest struggle is going to be finding high probability conditions, which again is going to be done through your journal as well. Now, we'll touch on that in a little bit, but those high probability conditions is oftentimes misunderstood, I feel like, for a flow trader. Okay, first, let's go over the interest list. Now, you need to choose one pair or one instrument. And my advice would be take a look at the US indices. Now, I would advise if you're just starting out as a flow trader, the ideal scenario is either picking for your available time from 9:30 to 11 a.m. or from 1 p.m. to 4 p.m. New York local time. Then taking either ES or NASDAQ. So choose one that you want to potentially trade, ES or NASDAQ. Then focusing on one of those instruments and trading futures. That's the ideal setup for a flow trader. Flow traders tend to be more futures traders because they also trade the US indices more. And the reason for that is why we choose the US indices and why I would advise that is because the US indices are the most consistently volatile throughout a long period of time. So what I mean by that, if you take a look at the crosses and you take, for example, something like CHF Canadian dollar, you are going to see a lot of consolidations, especially on the lower time frame, because it's not consistently volatile, not consistently volatile enough to actually look at a flow trading plan, to look at the lower time frame. Now, the US indices are arguably the best when it comes to being consistently volatile over a long period of time. So there's going to be good opportunities, and you are reliant on one single instrument. So because you are reliant on one single instrument in a flow trading plan, you should choose the best one, the most volatile one that brings the most potential opportunities. So choosing one of the crosses, that's just not a great choice because they are not going to have a lot of opportunities because they're not very volatile. US indices are very volatile, so they are also going to show a lot more opportunities because of that. So the US indices then go hand in hand with also trading futures. Now with trading futures, you will have a lot more advantage, as in you won't have spreads or very annoying spreads like you might have in a Forex or CFD broker that you have to take into account. You're way better off with entering on expansions. So for example, if the market's already moving higher, you quickly want to enter. With futures, you can easily do that. With Forex, if you buy whilst the candle is going higher, your fill is going to be absolutely atrocious. So there's a lot of advantages. And if you want to be and fully focus on flow trading, I would advise US indices and start looking at futures as well. Now with Euro US dollar and Forex, is it doable to be a flow trader? Yes, but I would more so argue it is potentially better to become a hybrid trader. And what I mean by that, you can take all the majors, for example, you can apply a filtering process on them and then see and still go into the lower time frame on, for example, Euro US dollar when you think it's high probability. So you can still, it's a mix between flow and a filtering process trading plan. It's in the middle. Now, understanding that, we also need to understand the plan. Now, before we dive into the plan, I want to go over a few struggles or a few misconceptions that I see in flow traders as well. And again, this could be because I explained it previously in different modules, etc., not very well. But it's very important to understand that there are more similarities than differences. And what I mean by that, there are more similarities between a flow trading plan and a plan like Delirium, so a filtering process trading plan and a flow trading plan, then there are differences. The main difference is going to be the use of timeframes. That's about it. So of course there are differences, but it's very important that they start off almost identical, I would argue. Now, right here, the biggest downfall of a flow trader is thinking that the higher time frame is not important. So just because you can go into the lower time frame and make more use of it does not mean you should neglect the higher time frame, because the higher time frame is still there for a reason. It's the most important time frame. If the higher time frame is not ideal, it doesn't align with the clear high time frame objective, etc., then you're still going to struggle as a flow trader. So the reason why I mentioned a flow trading plan and Delirium trading plan, they start off identical, is because the higher time frame is where you will be starting. So aligning yourself with the higher time frame objective, that's still very important as a flow trader. Other than that, nothing much changes. Now, what does change? Let's go into it. All right, here is the trading plan for a flow trading plan. Again, this is purely a skeleton, so a very naked trading plan. Now, right here, it starts as the same with psychology, all things that we have already gone over in Delirium as well. Now, the analyst, it's a little bit different, because what I would like you to do when it comes to a flow trading plan is mark out the higher time frame PD rays. Now, even if you're not necessarily expecting a continuation from those high time PD rays, it's still important to mark them out. So when I'm referring to high time PD rays, I'm mainly referring to monthly, weekly, and the daily. The closest one to current price action. Now, what that looks like, we'll go over it in a little bit. Then, the bias, the direction, stays very similar to what we have gone over in Delirium as well. Market structure, order flow, candle signs. Narrative, how are we getting there? Exactly the same. Context area, exactly the same as in Delirium as well. This is going to be a little bit different. Our guides, because you are going to be using the 4 hour, the 1 hour, and the 15 minutes a lot more to understand what price is doing and which higher time frame PD ray it wants to move towards. So the higher time frame PD rays that we marked out at step number 1, they are of course magnets and rockets towards price. So that means higher time frame PD rays is what price actually moved towards. Now, we are going to be determining which high time PD ray we want to move towards next by looking at the 4 hour, the 1 hour, and the 15 minute, understanding, for example, order flow. So mark out the fair value gaps that are being created and should be created. So the non-creation of a fair value gap on those timeframes is also important to understand. Then, where are the fair value gaps pointing towards? So, are they being bullish? Are we going towards a premium array? Or are they being bearish? Are we going towards a discount array? Then, the execution, the entry is going to be exactly the same what we've gone over right there. You can choose the way you want to enter your, again, very free in that as well if you want to. Now, right here, risk management is also going to be very similar to what we have gone over, and the psychology, the reflect phase right there as well. Now let's go over this top-down analysis a little bit more in depth, and also those guides right there. So if I open a chart right here and I'm looking at NASDAQ, so one of the US indices, then the first thing I still want to do is look at the monthly time frame. Now, do you always need to look at the monthly time frame when you are opening the chart? It could be to build a good habit, but overall, you essentially need to look at it once or twice a month to understand what the monthly is doing right here. Now, what is the monthly doing? It's moving higher, and we have been going higher for a very long time. This is important to understand. So let me write down the higher time frame objective. It's still bullish right there. This is good to set yourself a reminder right there of what you want to look at during the day. Because for a flow trading plan, people are going to be very susceptible, and this is in general, it's just our human nature. If you forget about the higher time frame objective, you're going to be switching biases a lot. That higher time frame objective keeps just a clear direction in mind. It gives you just a very clear guide on would we rather want to see bearish or bullish price action. Okay, then if we go into the weekly right here, we see that we were previously respecting this weekly fair value gap right there, have not created a new weekly fair value gap just yet. We are sweeping the previous candle low right there. We just reached the previous week, previous candle high right there as well. Now, overall, I think we can be moving towards that all-time high because we are not respecting this bearish fair value gap right there. We had a rejection to then move higher again. Overall, I think that all-time high right there is the main target. That's the higher time frame objective. Okay, then on the daily right here, what do we have? Well, on the daily, we had a few consolidations right there as well. We swept this low. We are currently potentially running this high. That would be nice because that turns into a fair value area to then potentially continue higher. Now let's see which targets we can have right here. We have an even closer swing high right there. So let's remove this swing high, that all-time high. Let's just keep that swing high right there on our chart. And then we also have this swing low right there. So are we going to be moving higher towards this swing high or lower towards that swing low right there? That's going to be our main question right there. So I've marked out those closest PD rates. Understanding the higher time objective is still bullish. Now, the reason why this is so important to understand the higher time objective and the reason why I think there are more similarities to a filtering process trading plan is because everything I've done so far is the exact same. Now, for a flow or for a filtering process trading plan, you would essentially say, this is bullish, so I just want to see and find a pair that has good bullish conditions and that is the highest probability to still continue in that same direction, essentially. Now, for a flow trading plan, you could potentially look for shorts earlier than a filtering process trading plan. But if we go into the 4-hour right here, and we start to look at these 4-hour bearish fair value gaps right there, then trading against the higher time frame objective is always going to be lower probability than trading in alignment with the higher time frame objective. Now, this is very important to understand because this is where flow traders make the biggest mistake. Because the flow traders and the journals I go through from flow traders, the highest probability price action is always in alignment with the higher time frame objective. So oftentimes flow traders like to neglect the higher time frame and think, well, I'm not a filtering process trader, so it doesn't really matter, right? It does matter because your highest probability trades most likely are in alignment with the higher time frame objective. So in this case, also bullish. Now, right here, then this 4-hour value gap and looking for any shorts that you want to continue lower because you think this swing low right there was the next target because we had a 4-hour bearish value gap right there, then you're neglecting the higher time objective. Could that play out? And could we potentially look for an entry right there to continue lower from that 50-minute value gap? Could have played out, 100%. But is it lower probability? Yes, always, 100%. It is definitely lower probability because you're trading against the higher time frame objective. Now, right here, if we now start using those 4-hour time frames, 1 hour and a 50-minute as a guide, as a general rule of thumb right here, when we sweep this low, or as a general rule of thumb, ideally you want to start off by looking at the 4-hour and the 1 hour. it's very similar to a delirium trading plan where you ideally only under very clear circumstances, you want to go into the 4-hour to look for 4-hour context areas. It's the same right here for a flow trading plan where the 15-minute is similar to a filtering process 4-hour time frame. So you only go into the 15-minute and look for 15-minute context areas if the 1-hour and the 4-hour is already very clear. So when we sweep this low right there, we understand the higher term objective right here is still bullish. Now this 4-hour fair value gap right there is a resistance area. So up until that moment, we understand we want to see higher prices. So I still want to look for overall bullish price action. That's the highest probability thing. But we do have a bearish fair value gap, which we can't neglect because that might, of course, turn into resistance or whatever it may be. That we can't neglect. We might continue lower from it right there. So here, this is where you're now going to use the 4-hour and the 1-hour right there to see, okay, which fair value gaps are we creating? Which fair value gaps are we not creating right there? Which fair value gaps are we respecting? Are we more likely to continue higher or continue lower right there? Now, the difference between a filtering process trading plan and a flow trading plan is you could have already gotten involved quite early right here to catch this move higher. For a filtering process trading plan, you would now be waiting for a perfectly overlapping fair value gap with the fair value area, etc., to then continue higher from that. That's the difference. You're able to capitalize on moves a lot earlier that you already see coming. So you are essentially getting involved, excuse me, a little bit earlier than a filtering process trader. That's your advantage. So here, you could have already potentially gotten involved right there. Now, if you now pay attention to the 4-hour, 1-hour fair value gaps right here, then overall, well, unless we start to create bearish fair value gaps and start to sweep that high right there, this next swing high, that's the target. So aligning yourself with 1-hour value gaps right here to continue higher as well, that's exactly what you would want to do. Now, the 15-minute right here, it's not necessarily super relevant because I first want to wait for 1-hour or 4-hour context to potentially show something to continue higher from it as well. And again, that is essentially a flow trading plan. So there's a few differences. Yes, because I would argue you really need to pay attention to small details as well to manage to get involved quite early in a certain move. So the move we just looked at, that sweep to then continue higher on NASDAQ, you need to pay attention to details to understand how early you can get involved right there. Now, that is mainly understanding as well and paying attention to order flow. But overall, there's not a lot of difference between a flow trading plan and a delirium trading plan. It stays quite similar. Just again, the use of different time frames, and that you might go into the 1-minute time frame a lot more than you would be able to go into a filtering process trading plan into the 1-minute time frame. Okay, so the don'ts. It's the exact same as the delirium trading plan as well. Replay backtesting, especially when it comes to flow trading. Replay backtesting is so useless. Don't use it, please. This is, and again, I mentioned, especially when it comes to flow trading plan, because you can simply go into, take a Monday or Tuesday and say, hey, this afternoon, I'm just going to look at the chart right there and I'm just going to essentially tape read. So what that is, you have nothing on the line, you're not executing orders, you're just going to read price action for what it is, and you're going to try to see if you can accurately say if this is going higher and when it's going higher, or if it's going lower and when it's going lower as well. You don't need to use the replay tool on TradingView or any replay tool outside of it. It's, in my opinion, it only builds bad habits, and especially when it comes to flow trading. So right here, also the biggest don't, of course, is not journaling. Flow traders, you need to journal. Very important. And then you're also going to find certain patterns that are better for your trading as well. Okay, then homework. Start hindsight backtesting and simply start trading. So hindsight backtesting, again, like we just did, not using the replay tool, simply in hindsight looking, hey, what happened? How could I have gotten involved? Determine the high time objective. Then see, how can I get involved quite early right there on those moves? And eventually simply start trading and gain that experience as well. All right, perfect. Thank you. right, in the previous video, we went over the